Hi everyone, welcome back to my channel. This is my usual weekly technical analysis outlook videos in which I will comment on what I think will happen to some FX crosses and equities. I have another series running, the financial market series, that breaks down topics in the financial market in ways that are easy to understand. You can find the links in the description about these videos. As always, before I begin, I want to clarify that this is not a solicitation or recommendation to enter into long or short positions in the names that I will mention in this video, nor do I have existing positions in them. This is not financial advice, and if you're using this content as a guide to trade, you are doing so at your own risk. Alright, let's start. The first part of this video will be reviews of names I've covered in past videos. This week will be on EUROSTOXY, Kiwi Swiss, Eurodollar, Sterling Dollar, Dollar Stocky, Aussie Swiss, Sterling Kiwi, the US government 10-year yield, BMW, Richemont, Disney, Estee Lauder, and Baidu. There is only one new coverage in this video, which is on Hugo Boss. Also, I will cease coverage in these names: Euro Sterling, Silver, Dollar Sing, Dollar Ringgit, and Sing Ringgit. I've put in timestamps, so please have a read of the description so that you can skip to the names that interest you. I said that EUROSTOXY is forming a head and shoulders top in the last video on the 2nd of September, and downside bias should increase once EUROSTOXY closes below the Ichimoku cloud. There is now 3 consecutive weeks of closing below the Ichimoku cloud, confirming the downside bias. I expect EUROSTOXY to be lower going forward, and this bearish pattern, the head and shoulders top, will be deemed complete if there is a close below the 10.99 level. I covered Kiwi Swiss in the video on the 25th of August, saying that it has likely entered the bullish resumption phase. Unexpectedly, Kiwi Swiss had another corrective phase over here, but since then price action has bounced higher to close above the cloud, bullish territory, as well as above the 20-day simple moving average. So I believe it is now in the bullish resumption phase. Staying bullish on Kiwi Swiss, the textbook target is at 0.5571 with resistances at 0.5352, 0.5421, as well as 0.5474 that can repel Kiwi Swiss's advance. Since the last video on the 8th of September, in which I said to expect further downside correction for Eurodollar in the coming weeks, Eurodollar has failed to push much higher above the 112 level. Now this has raised the risk of a bearish pattern, a double top, and if Eurodollar falls further from here, which is what I expect, the bearish pattern will be completed via a close below the neckline at 1.1002, and the textbook target is at 1.0802 over here. It is still too early to tell if the longer term bullish symmetrical triangle will be invalidated. Let me show you the symmetrical triangle that was completed way back in July. Over here, it is still too early to tell whether this bullish pattern will eventually be invalidated, because Eurodollar, if it falls to 1.0802, from a weekly chart perspective, price action may still trade within the Ichimoku cloud over here, and this doesn't fit the invalidation of this bullish pattern. Also, I have always said that textbook targets are not always fully met. That means the 1.0802 level may not actually be met, and most of the time price action reaches just 60% to 70% of the targets. So assuming this is the case for Eurodollar, it will still be above the cloud after this decline, and may bounce off the cloud support to resume the bullish trend. This is the reason why I have asked you not to expect textbook targets to be reached quickly, especially if this is a longer dated chart, which is a weekly chart. It will take time. The weekly, monthly charts, they can take months and even years to achieve the textbook targets. In the last video on the 15th of September, I said I will not rule out more correction in sterling dollar. There is now new development. I suspect that sterling dollar is forming a rising wedge, a bearish pattern. Price action over here was rejected twice by the resistance trend line, and I expect the next move for sterling dollar to be lower towards the support trend line. If there is a breakdown below this support trend line, then this bearish pattern will be complete. The textbook target is at 1.28 over here. Now, remember what I said about textbook targets. Not all targets are fully met, and most are just 60 to 70% met. So in this case, it is still too early to say that this short-term bearish outlook in sterling will result in the invalidation of the bullish symmetrical triangle. Let me show you the weekly chart, which is where the symmetrical triangle was completed. So even if sterling dollar were to complete this rising wedge and fall to 1.28, it is still within the confines, the upper confines of the symmetrical triangle support. And if sterling dollar doesn't reach 1.28, it may bounce off the support at 1.3 to resume the upside, and still this bullish symmetrical triangle will still be valid. I noted the potential formation of a head and shoulder stop in a video on the 15th of September. Dollar stocky has completed this bearish pattern on the 24th of September, and the textbook target is at 9.21. Now let's not forget that the bearish outlook for this cross is due to the completion of a bearish symmetrical triangle on the weekly chart. Let me just reveal the lines to give you a better look. Over here, it's a little messy, but just focus on the triangle trend lines. The completion took place in the week of 12th of August. Both of this weekly bearish pattern as well as the daily bearish pattern coincidentally have the same textbook target, which is at 9.21. Note that the support at 9.9065 is crucial. If this support breaks, then I'll be more confident that dollar stocky will be headed towards its textbook target. Aussie Swiss's attempt to break above the cloud was successful, and it has since completed the head and shoulders bottom via a close above the neckline at 0.5814. This bullish pattern is now complete. The textbook target is at 0.6084, and resistances are at 0.5872 as well as 0.6005, both of which have the potential to reject Aussie Swiss lower when tested. It took a while, but sterling Kiwi finally is moving in the direction that I predicted. In the video on the 2nd of September, I noted that this cross completed a cup and handle top, a bearish pattern, but also cautioned to not forget the corrective phase of chart patterns. So sterling Kiwi initiated the corrective phase over here, and the upside lost traction within the cloud, and since then it has fallen back below the cloud as well as below the neckline at 2.1099. I believe sterling Kiwi is now in the bearish resumption phase, headed towards its textbook target at 2.0291, and potential bounces are at the supports at 2.0919 as well as 2.0615. I started covering the US government bonds 10-year yield on the 15th of September and noted that there is bullish potential in yields despite the Federal Reserve cutting interest rate. All the signs of rebound that I noted in the last video eventually led the 10-year yield higher as expected, and it has completed its falling wedge, a bullish pattern. The textbook target is at 4.3. The latest decline over here could be the start of the corrective phase, and I expect the resistance trend line to be a support to bounce yields higher when tested. Moving on to equities, the first review is on BMW, just to show you how the chart looks like before I zoom in onto the latest price action. BMW is bearish as a result of the completion of a double top on 29th of July. So it has fallen, it has had one corrective phase, and I believe it is undergoing the second corrective phase. Now let's zoom into the price action. What I said about BMW on the 15th of September was that BMW bounced off the support at 68.60, and this is the support that I've noted ever since the completion of this double top. So the latest price action suggests that upside over here on the 27th of September may be exhausting, though I'm not sure it has exhausted. We might still get some upside here as a form of correction, but I do think that upside will falter around or even before the cloud resistance at around 85.29 before resuming the bearish trend. So stay bearish on BMW, but still in the near term, at least in the coming days, there should be some upside still as a form of correction. Just like BMW, Richemont is also bearish as a result of the same pattern, a double top. It is a good example of why we should expect gaps to be filled. Granted, not always, but usually so. Now, Richemont rallied this week to finally close the gap that occurred on the 4th of September, as expected. And in doing so, it formed three gaps. One on the 24th of September, second one on the 26th of September, and then one more on the 27th of September. So I believe the upside, and especially if you look at the latest price action on the 27th of September, the upside, I believe, was rejected by the Ichimoku cloud resistance. So there are three more gap ups, and you know what I'm going to say. Gaps are usually filled, and I believe this upside is about to be exhausted. I believe the next move for Richemont will be lower. Firstly, to close the gaps formed on these 3 days and to resume its downside to its textbook target of the 100.45 level. When I last covered Disney on the 25th of August, I said not to give up on this stock because there is bullish potential amid the formation of a head and shoulders bottom. Since then, Disney has crept higher. On the daily chart, let me switch to the daily chart. On the daily chart, Disney has managed to hold above the cloud. This is a positive development that suggests further upside. On the weekly chart, we can start to see the formation of a second shoulder of this head and shoulders bottom over here. This week's price action closed above the 20-week simple moving average, which is also a positive development that suggests further upside. I am biased to the upside in Disney and awaiting a weekly close above the neckline at 124.8 to turn bullish. The textbook target resulting from this bullish chart pattern is at 171.06. I have not touched on Estee Lauder since the 18th of August, and in that video I said that there were signs suggesting a rebound going forward. Price action initially dipped after that video but found support at the support trend line over here before bouncing higher this week. I believe this is the start of a move higher towards the resistance trend line, and if there's a breakout above this resistance trend line, this bullish pattern will be complete, and the textbook move is around $79.13 US. Watch out for the major resistance at 159.73 that can reject Estee Lauder lower and end this bullish trend. Baidu is a name that I should have updated in the last video, but I simply did not have the time to do so. I highlighted the formation of a falling wedge, a bullish pattern, in the video on the 18th of August and said that there is potential move of 25.75 Hong Kong dollars if there is a breakout above the resistance trend line. The breakout took place on the 16th of September, and we can see that Baidu has reached more than 70% of the expected move. Let me show you over here. So it has moved slightly above the 78.6% of this total move to the textbook target of 107.6. I can actually see coverage over here, but I would like to see how this progresses. Due to the gap up on the 27th of September over here and the excessive advance above the upper Bollinger, I think the next move for Baidu will be lower first as a form of correction, and I expect supports perhaps around the cloud support to bounce Baidu higher and resume its bullish trend. There is only going to be one new coverage in this video, which is on Hugo Boss. I am a bit late on Hugo Boss, but because I just did not expect this sharp move this week. This German fashion name completed its falling wedge this week, and the textbook target is at 47.39. Now this bullish trend could be the start of something bigger for Hugo Boss. If we switch to a monthly chart, this upward move could eventually form the second shoulder of a potential head and shoulders bottom for Hugo Boss, and the neckline is rather high, around 74.5, and if this gets completed, we could potentially move to 130 or even 140 if this bullish pattern gets completed. But first, let's just focus on the shorter term weekly chart that suggests a move to 47.39. As noted in the beginning of this video, I will be seizing coverage on a few crosses, namely the Euro Sterling, Silver, Dollar Sing, Dollar Ringgit, and Sing Ringgit, because the potential bearish and or bullish patterns that I have highlighted were all invalidated. I'll start off with the Euro Sterling. The falling wedge that I noted in the last video was broken down. The support trend line was broken, and this has invalidated its bullish potential. So I will be seizing coverage on this name. I will also be seizing coverage on silver because I noted a potential head and shoulders top in past videos. The second shoulder was formed and almost we were near completion, but then price action just rallied. So this bearish pattern has been invalidated, and I will no longer be covering this name. But I do want to highlight that the latest price action over here is an upside exhaustion, which means that there could be a decline going forward. And if silver actually declines from here, I will not rule out the formation of another bearish pattern, which is very likely going to be a double top. But let's see what happens then. The next name that I will no longer be covering in future videos are all falling wedges on the Dollar Sing, on the Dollar Ringgit, as well as the Sing Ringgit. All these three names were invalidated. The bullish potential was invalidated via a breakdown. Dollar Sing's breakdown on the 24th of September invalidated this bullish potential. Similar to the Dollar Ringgit as well. The bullish potential was invalidated also on the 24th of September. And finally, Sing Ringgit got invalidated on the 24th of September. So I will no longer be covering these three names going forward. That's the end of my sharing. I will give updates to these crosses and names only when there are meaningful development, and in the next video, it will highly likely be on new crosses and new names. If you like what I'm doing, please help me out by giving me a like. Please subscribe and hit the notification button for more videos like this.